All right, guys. So who am I? I'm David. I'm from Foreign Exchange LLC. I'm the founder, and I do have other analysts in the team as well. But I'm the one on the top analyst in the company. And basically, I've been trading for 5 years. So I have a good experience of technical analysis and the market maker stuff. But the reason why I'm saying it is because I come from the same background as you guys are, pretty much a technical background. Everybody started off like that, but eventually I was stumble across the market maker method where it was very different approach to the market, but it made sense. However, technicals did make sense to some degree, but at some point when I was introduced to market maker method, everything changed. Basically, the understanding of the market, the way market moves, why it moves at a certain time, why it moves at a certain level, why it reacts to a certain level, it all made sense. With technicals, it really didn't make any sense. That's the reason why I kind of transitioned from the technical trader to a market maker trader 4 years ago. Means I've been trading for 5 years. So the first whole year when I was trading, I was strictly using technical analysis and basically price action and things like that. But my accuracy was great because I kind of learned everything starting from elite ways, Bollinger Bands, harmonics, you name it, everything in the textbook, pretty much every single thing. But I was applying it, all of that, in order to be accurate, but at the same time, I was only like 30 to 40% accurate. And I do see that happening with other individual traders as well, because they are never, they make profit, but they end up losing the profit as well. And they're not consistently making a lot of money over time, which is ROI, what we look for, the consistent ROI every single month. That's what you're gonna look for if you're gonna trying to become a full-time trader. So in order to become a full-time trader, you need to know the strategy very well. And the second thing is that you need to be accurate. It's not like if either or. In technicals, it's 50-50 chances in the trades. And it's a either or situation, means a breakout happens, you do either or. If a resistance gets hit, either or, means if the price breaks above, if the price rejects it, either or. That's what the approach is in technicals. But in market maker, it's not like that. It's more about straightforward, where the trend is gonna be, where the trend's gonna be heading. And if you're wrong, you take a small hit, but if you're right, you take a bigger hit as well. And that's what we look for. And basically the aim is to get about 1 to 3 risk reward ratio, means I'm only risking about anywhere from 0.10% to 1% on a trade. And I'm trying to make anywhere from 0.30% to a 3% gain in each individual trades. But you're not going to start off as a 1% trade. Most likely, you're going to start off as uh, uh, what do you call it? You start off as a small risk, um, and basically eventually grow your risk to a 1%. But you start off as a 0.10, and then slowly and gradually you're going to build up your risk to a higher level based on the accuracy you're going to have over time. Because right away, if you come in, started trading with 1%, for an example, you're going to blow your account very soon, because you're not going to be accurate. You're not going to be precisely making those entries. So you're going to be in a lot of drawdowns and a lot of losses, which you want to avoid that at the first beginning stage of your trading. So moving forward, today what you're going to learn is how I mark up the charts. I'm not going to go into the details of the strategy itself, because there's a course for it, and it explains you very deeply about the strategy itself. But today's webinar is completely focused on the review of the market, means what's going to happen for the week, and how are we going to be approaching it, when I'm going to trade it, and when am I going to enter it, and when I'm gonna exit it. And just keep an eye on it, keep an eye on the way I trade and learn from it. And over time, you're probably gonna get a hang of it just by watching, but it's much more better when you get a course. It basically digs deeper into the strategy itself and explains you when you should be taking a profit and what the kind of level you're talking, what do we talk about, and reversals and the trend itself and all that stuff. So let's get started. All right, so as we can see, pretty much I'm on a Euro GBP right now, but overall, the whole charts that we scan is about starting from the AUD pairs. We go alphabetically order, so it makes much more easier for me as well, and for and to scan it during the sessions as well. So AUD all the way till the gold. So line it, if you count these, it's about 31 pairs, about 30 to 31 pairs total. I'm gonna scan these all tonight and try to see the potential setups. However, this Euro GBP pair was analyzed during the weekend when I was free and I was just checking my charts. I analyzed it and I did see a good, nice pattern, but we're gonna come back to it a little bit later after I finish all these pairs, okay? So we're gonna start from an AUD USD. And the first thing first is what you're gonna look for is a trend. That's the objective. Is when you look at a chart, it's gibberish to you. You don't understand what's going on. It's a very what do you call it? It's very distracting at the beginning, but you need to know where you are in the cycle. So in this scenario, what I'm looking at is a 1 hour time frame. Normally, that's what we trade is a 1 hour time frame. Uh, and that's where the best setups are formed, because Forex is a day trading market. It's not a swing trading market. It's not a stock where you're gonna swing it for 2 months or something like that. And it's not a scalping market like binary where you're gonna try to enter and exit right away. It doesn't work like that. Forex is a day trading market, means you need to approach it as a day trader, and you have to apply the strategy, which is the day trading strategies. Okay, now you have 5 days in a week, means you have each individual days where the price moves up and down, and then you have a price movement for the whole week. So there is a structure behind it, how the price is going to be moving and how the market maker manipulates the price in order to book a profit for himself at the end of the week or midweek, whatever the scenario is. He has to book a profit, because otherwise he's going to be hearing from his boss when he doesn't make a profit. So we have a job as a day trader, as a retail trader, because we are a retail trader. We are not an institution traders. We are retail traders, means um, our job is to make a profit as well at the end of the week, just like the market maker does. So the market maker has a pressure of moving the price accordingly and collecting the money. And as a trader, we need to spot that and identify that pattern and trade that towards our favor. So since this one is in a higher time frame, the pattern kind of looks in a much more higher time frame. Let me scoop up. Okay, yeah. So we got a peak formation low here, level 1, level 2, and a peak formation high, and basically a level 1 reset. Level 1 reset starts with a W, level 1, level 2, and then we have an M formation. Then you have a level 1 consolidation right about there. So I'm not gonna go back in time that far, but what I'm gonna look for is probably about a month long of the chart itself, or where the peak formation started. So what is a peak formation high? Peak formation high is, in other words, you can call it a resistance point. Okay, that's what technical traders call it, but we call it a peak formation high because that's the peak formation. And the support, we call it a peak formation low. Okay, we use a little bit of different terms because it's much more better that way. So since this was a reset, we have a count, which is the trend. So what kind of trend are we looking at? This trend started from this point and it lasted all the way till here. So what kind of trend this is? It's a bullish trend. In the bullish trend, you have to find a pattern called WVVM. That's a bullish pattern. And then for the bearish pattern, it's called MAAW. And you're gonna see that in a minute. So I'm not sure if you guys are aware of the strategy itself, but if you're not aware, don't stress it. You're gonna get to it a little bit later the more you visit the webinars, you're gonna start to understand it better. So right about here, this is a level called a W formation. It kind of looks like a W, but right about here, right there, that's it right there is a W. That's a W pattern that we have. And most of the time it has a divergence as well on the RSI, which shows buying pressure. Okay, it shows a buying pressure, and we know that it is a good kind of reversal that you can trade off of it. Now, once you identify the W formation, the second objective as a trader is to identify where your level one's gonna be consolidating. And as you can see, it's pretty much consolidated in a sideways movement, means this point is the resistance point, but it's basically a level one area. That's what we call it. We don't call it a resistance. It's more about level one area. That's where the market maker selected his highest point. So he's gonna react to it, and he's going to try to consolidate the price in a sideways range to collect more orders over time. He can do that in a week. He can do that in 3 months. It just takes time. But most of the time, it's about 1 week to 1 month. That's about it. And that's the average you're going to see on an average basis. Average, okay? So it means it's most happens like that, but not a lot of times. But you're going to see these kind of pattern play out according to those time frames. Now, when a level one is formed, so there's a bullish pattern is called W, V, V, and an M. And the bearish pattern is called M, A, and W. Okay, so right now we have a W formation. So what is the next stage? The next stage would be the V formation. Right here is a level one, which is a level one consolidation, means the price is kind of ranging in the sideways movement. It's not breaking out. As you can see, it's hitting that again, hitting it again, hitting it again. And then right after that, there's a breakout, retest, and a takeoff, right? So that's basically a breakout retest, means breaking out of level one. That's all it is to it. Now, this correction, because right here, this is an impulse. The price kind of went straight ahead. It didn't do any retracements or nothing. It was a straight impulse. But this part was a consolidation phase, which is called a retracement phase. Now, when you have a retracement phase, it tends to look like a V formation. And that's exactly, it's looking like that, okay? That's a V formation, and it normally takes off, but that's a big V formation, okay? Now, what you're gonna look for is a second phase of the market, which is the level two, which formed right about here, right about there, okay? And that's gonna be your second wave of consolidation, right about here, okay? That's gonna be your level two. And as you can see, it's pretty much respected the highs as well, and it retraces back, collects more orders, collects more orders, collects more orders, and then takes off, okay? And that's basically how you identify the levels. And as you can see, it's pretty much, it broke out of the level two structure, and then it created the peak formation high, which is an M formation. And whenever the market is at the M formation, you're gonna see two things. One is you're gonna see divergence. You're gonna see higher highs on the price making higher highs, and then the RSI is overextended, means above 70, and then it's gonna have a divergence as well, means that basically showing you a selling pressure from the institution, but then they're doing a stop hunt by moving the price higher. Okay, and once they got what they needed, they pushed the price back into the range, into the cycle, which is the MAAW pattern. Okay, so now what we're gonna go for is the pattern count, which is the M formation and then the A formation and the second A formation. So right about here, this was an M formation right about here. You have a breakout out of that structure. Then you have a big consolidation, which took place right about there. And that would be your level 1 consolidation. Right about here, what you're looking at is a level 2 consolidation. However, level 2 has a divergence. So whenever there's a divergence, it means it could have a potential of a reversal and a continuation. It all depends on what level you're in. But in this scenario, if you see this, the potential is this, and then drop. Okay, so most likely it's gonna go back up, hit the 200 EMA, stop there, collect more orders for buyers, and then reverse back to the lower lows. And that's gonna give you the second level of consolidation with a stop hunt. So right about here, we're gonna mark up our charts. The way I mark up is I identify the higher highs, and I identify the divergence, which is right about there. And then the level 1 consolidation starts right there and pretty much ends right about there. Okay, and then basically all this is just to collect more orders. That's all to it. Okay, let's see there. Now that was a retest of that level. You can see that was a pretty nice break, came back, tested that support area. You can call that support, but I call it a level 1 retest. And you can see after the retest is pretty much sank down. Okay, now let's see what we have here. Okay, so that's level 1 right about there. And now what we have is a nice level 2 consolidation, which is taking place right about now. So what do we expect as a trader? We expect a stop hunt high and a drop or a straightaway drop. But since we have a divergence, it's more likely to go back up to this point, and then it's gonna push the price lower. So as a trader, we don't trade level 2s, but if you wanna do so, you can still do it, but with the minimum risk. Means like you wanna risk the less you can. And at this point, this is what I'm expecting, and back into the other range. And that's gonna be a little bit lower than the previous low. Okay, it's gonna go a little bit lower like that. Looks like we do have a support area from this point. Okay, that's a peak formation high from the past. And basically it really doesn't matter the resistance points and the support areas from the past. It really doesn't matter. It all matters at the present moment. The present moment dictates where the price gonna go. So based on this support, I can remove it and I can just predict that. Like it's really doesn't matter if there is a support area or not, or a resistance area or not. Okay, it's all about the level count and the where the price gonna go next. Oh my, let's see there. I have to add someone. Okay, perfect. All right, so it all depends on where the level 2 and where the level 1 is, but you're gonna notice that the price will never break out. If it is a reset, then the price will correct on the level, but if it's a correct trend and if it's a right cycle, it will follow through it, means MAAW. So you're gonna expect a W a little bit lower than this point, and you can expect pretty much like that and back into the range. and you're going to have a bullish trend again after that, which is a WVVM pattern. So right now you have an M formation, level 1, level 2, and level 3 is about to form, which is the peak formation low. Probably next week, I believe so, because this week I believe that the price gonna do this. It's more about like the M formation, probably on a Tuesday and Wednesday. It might do a stop hunt high and the peak formation high for that week, and then it will create an M formation right about here probably, and then it will continue to sink down lower. But as you can see, the opening of the week is right about here, means it has to close closer to it or below it, because it's a level 2 count, means it has to pass this area pretty much right about here. It has to break this 70145. It has to break that structure in order to be in a level 3, which is the peak formation low. So as a trader right now, what we're expecting is a nice little rise to the 200 EMA and then a continuation drop. So I'm gonna trade this tonight. After the webinar is completed, I'm gonna go ahead and I'm gonna place my trades, but I'm not gonna waste time taking a trade and all that stuff right now, because it's gonna be consuming. Because right now it's not relevant to get in a trade. You can do so if you wanna, if you're trading early, but when the London session is about to start, it's gonna take off, and a lot of times it takes off before the London session opens. So uh, I live in California, so it's like London session starts at midnight, but most of the time when I noticed it is that the impulses starts around 11 o'clock. Sometime it's about 10:30, 11 o'clock, and then sometime it's about 3 a.m. in the morning. But I'm not gonna sit here on my computer watching the chart move. Which, I'm not in the business to watch the charts. I'm in the business to make money. I'm in the business to go and do my job and do my other stuff, right? So it's not about nurturing your trade. It's more about getting in the trade and knowing where you are and knowing what are you anticipating. You already know how much risk you're gonna take. You already know where the take profits levels are. So you're not gonna watch your trades 24/7. Means every second of the day you're gonna open your MT4, check on it like a madman. You don't want to do that. It's a living. You want to do that as a living. You want to live your life as a trader and not just in front of your computer. So if you're trading it, know where you are in the cycle so you don't stress out and panic. That's the important part. It's not to stress out. And when you don't stress out, you can easily uh, get in a trade and get out of the trade with confidence. And that's what you want. If you have to be confident in yourself and in the strategy. You become confident when the strategy is working. That's when you become confident. So it all comes down to a strategy itself. So right about here is we have a nice little pattern, which is a level 2 consolidation phase. We are anticipating on a buy right about there, and if you want to look how I trade, let's see. We probably have to go on a 15-minute. Let's see. I want to make sure we're on the right. Okay, so right about there. So we have a push, push, push. It's pretty going good. All right, so pretty much Friday was the day. All right, so today is pretty much Monday, Sunday, Monday. That's basically the gap right there. And then we are continuing into the Monday cycle. Right about here, as you can see, it's about to break the technical resistance area. Means a lot of retail traders are trading about here, and they're looking for a sell. Why are they looking for a sell? Because they use moving averages. A lot of traders use moving averages for their buys and sells because they use this pinpoint to make a sell, and breakouts, like a moving average breakouts to trade as well, and they have indicators based on that as well. So a lot of traders fall for it. A lot of retail traders fall for it, and they trade that based on that. So it really doesn't matter, but it's better to know the other side as well. But it's best to look at a 1 hour time frame. It gives you a clear picture. As you can see, pretty much the market opened with the big impulse, 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 and all you can see is a big candles, and it's pretty much printing out. Even on Heikinashi, it's pretty much all green. In 15 minutes, it's pretty much all green. So it means it has a really good bullish power right now, but most likely this impulse is institution impulse, means institutions are buying it. They're buying it to induce traders to go long. Why? Because this is a double bottom. For a lot of traders, this is a double bottom. But when you are a technical trader, when you're trading a double bottom, what do? You put your buy here, you put your stop here, but you put your take profit here, because that's your next level take profit area. That's going to be your resistance area. So your anticipation is this as a retail trader, but our anticipation is a minor retracement to the high and then a continuation drop, because we are in a bearish cycle. We're not in a bullish cycle yet. Once we're in a bullish cycle, then you can anticipate in that big rise. But right now you're anticipating in a probably about uh, give or take about 90, 100 pip move. So that's about what you're looking at. It's about 100 pip move, which is really good for the whole week. They're going to take that 100 pip move and probably drop it 150 pip move or drop down. But it all going to be based on how much money they collected and how much money is available in the market itself. Um, right now, probably it's Monday. We don't receive a lot of volume, but that's what they're going to be doing. When the market doesn't have a lot of volume, when there's not a lot of retail traders trading it, it's easier for the market maker to move the price in his own favor, because he has the capital at will. Means each bank give their traders about $10 billion to trade with, and there's a trading floor. Go on Google, type in UBS. Go on Google, type in Chase uh, trading floor. There's many trading floors in each country, and they all do the same thing. Each individual traders, there's hundreds of them, and each individual trader has about 10 billions at their disposal. Means when they see the opportunity, when they know they're buying it, they continue buying it, because they don't see any players against them. It's a win-win situation for them to move the price. It's easier for them to move the price because there's nobody betting against them. So the price will easily take off to the high based on the volume that's been collected. So if you're trading it, probably the best option would be to put your stop below the low of the day, which is right about here, because the market maker not going to come back to retest that low. Otherwise, he's going to get out of his own orders. So if you're buying as a retail trader, or if you're following this, pretty much you put your stop below the low of here, below the low of the day, and then probably put your take profit right about there, and that's going to be your 1 hour time frame, and right about there. So about 90 pip, give or take. We could have got a 100 pip move, but it's okay. If you entered in the day, then you would got a nice little pip. But right about here is a 90 pip move, which is really good, to be honest. It's 90 pip in a week is pretty good number. Okay, and that's pretty much gonna be it. And then when the market maker creates the M formation, then you can look for a short right about there. But you have to wait for that M formation to finish. You can't rush it. Just because it hit the 200 EMA, you're gonna start selling like an idiot. You don't want to do that. You want to wait. You want to wait for the confirmations, and there is a certain confirmation that we look for. Okay, once you have those confirmations, then you're going to look for a sell. Probably the price might come back to this low and stop right there. And then probably next week, it might continue to lower lows, okay, based on the volume that's been collected. It all depends on the news. It all depends on how much money isn't available in the market itself. News brings people on the table, means it brings money to the table. When a news is about to release, what does a retail trader does? He looks at a freaking, sorry, I don't want to curse, but they pretty much go on, what they call it, uh, Forex factory to look for news. And like, oh, okay, there's a news coming up in few hours and I'm gonna trade that. And they trade it. So think about it this way. If a one person thinks like that, there's millions of people that think exactly like that. And they're trading at news time, which is bringing money to the table. It brings money into the game for the market maker. So once he receives all that money, he goes the opposite direction of the retail traders. He collects their money. He gives them the order flow. Basically, he validates their orders. He makes a profit on the spreads, because there's, when somebody is placing a trade, there is a spread, and the spread gets bigger during news time. It gets way bigger, means the broker, the market maker is asking for more commission. That's all he's asking for. He's asking for more commission. So you as a trader need to know, okay, like, he's looking to make some money. That's all it is. When he makes his money, he gives his orders to whatever player he wants to give to. But the majority of the time, institutions are in control because they have the most money at their disposal. So always remember that. Okay, regardless of how the retail traders are moving, it's always the institution's gonna be on the winning side. So you have to know their every single move. You have to stalk the broker. That's what we call it. Stalk the broker, stalk the market maker. Okay, so right about here is about a 90 pip move, about 28 pip stop loss. So it's really good move, like pretty much about 1 to 3 risk reward, which we look for, which is great. Means you're gonna, if you risk 1%, you're gonna make 3% on this trade. Easy peasy. But if you're a beginner, don't trade like that. Trade with 0.10 or 0.10 is best. Once you trade it for like a whole year, then go to 0.20. Then every single year, just go little bit more. But you can go a little bit higher too, based on the accuracy. So you have to reflect on yourself. Upload your demo account or the live account onto the MyFX book or FX Blue. I would suggest to upload it on FX Blue. It's much more better than MyFX book. It gives you better statistics. And what it will do, it will give you, it will tell you how exactly you are, pretty much how accurate you are, and what type of risk you're taking, what type of drawdown you're going to be having. But the accuracy is what you're looking for. How much accurate you are. Out of 10 trades, how many are you winning? The more you win, like 10 out of 9, if you're winning like that, then it's good. You can increase your risk a little bit more, but do that in a monthly cycle, like 1 month. For a whole month, trade with one risk, and then once you get better, then increase it little by little. Don't rush it. It's not a sprint, it's a marathon, because you're trying to make this as a living. So trade it like a job, pretty much, because it's not a hobby like most people think. Like, they basically approach Forex market as a hobby. Like, oh, it's a part-time income, I'm gonna make some little bit money, that's it, I'm gonna use my savings and I'm gonna blow it, or whatever the scenario is. But the expectation is higher. When they come in, they think they're gonna make millions, but they end up blowing their accounts because they don't have patience, they don't have consistency, and they don't have the right education as well. Okay, so moving forward, I'm not gonna yap much, like I said, uh, but I want you to guys to understand this very well. Okay, I know you guys taking the time to be here, but most people don't take the time to be here on this webinar, which is okay. I don't care, because at the end of the day,
it's for my personal gain. It's not for others. I do this for my personal gain, but you guys are here for your own self. That's it. You guys are here for your own self. I'm not gonna uh, beg you guys to be here. You make the effort to be here because you want it bad enough. A lot of people don't want it bad enough. They take it very lightly because Forex is a very saturated market right now. 5 years ago, Forex was very new, very new. Everybody was interested. Everybody made time to be on the webinars. I used to have 200 people on the webinars. Uh, and it was crazy, but the thing is, it's became saturated. Means every freaking people, like everyone is a trader and everybody is a guru, and everybody is like teaching, everybody is giving signals. It's very saturated. But the thing is, in reality, nobody show it's basically nobody is consistent enough. That's what I would call it. Because if a lot of people were consistent enough, you're gonna see less profit screenshots and less yapping, less webinars and less other things, and less lifestyle videos and less Lamborghinis. You're gonna see more track record, which a lot of people don't freaking have. A lot of people don't have that, not even one. Okay, and that's the scenario. It's like, why are you trading if you're not focusing on trying to make a living out of it, right? That's the goal. You want to make a living out of this trading because you're wasting time on this. So why not make it better for yourself, and basically like try to get good at it and be consistent at it and trade accordingly. And when you trade accordingly, you will get better. Trust me. I have students who does good very well because they do homeworks. That's what comes down to it at the end of the day, because they did the homework, they did the work. You don't get successful over quickly. You get successful over time with experience, right? Everybody knows that, but everybody ignores that as well, right? They want to rush the process, but rushing the process only pushes you down, doesn't increase, it doesn't help you with the growth. So uh all right, so I'm done talking. All right, uh I'm gonna start marking up the charts and I'm gonna get to the business. Okay. All right, so pretty much this is gonna be an easy trade for tonight, and we're gonna focus on the next one. And whenever I mark up my charts, if there's a good setup, what I do is I bookmark it because it helps me to come back to it in the week. Means if I don't see anything on this pairs, I will completely ignore it for the whole week. I'll come back next week on Sunday. I'll analyze it again to see what kind of pattern it formed. But if the bookmark is the ones that I marked, I'm gonna check that on the whole week. I'm gonna check it every day to see how the price is moving, and do I need to take a trade or do I need to sit back and relax and watch how the trade is gonna be moving. All right, so AUD NZD would be the next pair I'm gonna analyze. So let's get started again. Same scenario. Okay, we're gonna analyze how the market's moving. So pretty much here, right about here, okay, there we have about level 1 consolidation right about there. Peak formation high. Actually, let's see, let's go back in time more. Okay, so we did found the trend which was right about there. That was a bearish trend. So this is not a level because I didn't see that, but right about here, you have a peak formation high, looks like an M. You have a divergence which validates the M. Then you have a breakout out of that structure. You have a level 1 consolidation. This is a stop hunt, and always a stop hunt is going to be aggressive because the market makers is using his own capital to take people out. Means he's inducing traders to go long, and then he collapsed them after the breakout. So this breakout induced so many buyers, because when retail traders, what they do, they have a buy stop right there, right? Exactly, that's how they trade. They have a buy stop right there, and they believe when the price breaks out of that structure, the resistance is going to continue to go up. And then when when it breaks above here, above this structure, they continue to buy. Yes, they might make a profit, but what they're doing is they're looking for even much more higher gains, right? Whatever the scenario is, but this is a level 1 consolidation. Then you have a nice little stop hunt high with the M formation as well. You have a divergence, now a drop, a big collapse, and then a nice level 2 consolidation, and then a nice little drop, and then a peak formation low, which was created right there. Divergence was here, but then the W structure was created below the low of the level 2, which is right about there. They used only 2 days to validate it, but the divergence was over the period of probably few days. But you have a valid divergence right about there. Okay, now right after that divergence was completed, what do you see? You're pretty much seeing that the level 1 is consolidated right here, level 2, level 3, level 4. I wouldn't say this would be a level 4 because it's not, doesn't look like a consolidation. It's more like this, I would say. So it's more about like that. Okay, so it's a nice little wedge pattern, but a wedge pattern is always a consolidation area. So that's gonna be a nice level 1. This right here is a level 1, level 2. If you want to, you can combine them together because it's very close to each other. And this level area right about here, this area could be called a neckline retest, which is from the W. So it would be still considered above it. So I would consider this as a whole big level. But regardless of if this is a 1, this is level 2, doesn't matter, but it's all about knowing where the consolidations are forming. This wasn't clear. Normally it is very clear, but in this scenario, it's not clear. But from my experience, this is a level 1 because the way it moves, and I can recognize it because I've been trading for 5 years. I know how the pattern moves. So it's very visible for my eye, but for you guys, it's going to be hard to look at and hard to find it. But over time, trust me, the more you trade, the more you practice, you're going to get it over time. It's going to make sense. You're going to start to understand it, but you're not going to get it right away. It's not that easy, but it comes from practice. It comes from doing homeworks. That's when you're going to understand it, like how the cycle is moving. Right about here, this would be considered as a one big hole level. I'm going to shift that into this area right about there, and that would be your level 1 consolidation, a level 2 consolidation right about there. So this whole area right about there, if you drag it across, what you're seeing is a pretty much a consolidation. Right about here is a level 1 consolidation, but you have a peak formation high. Okay, you have a 3 stops, 1, 2, 3, 3 push to the high. You have a divergence, like I always tell you. M will always have a divergence and W will always have a divergence. Otherwise, it's not gonna be valid. If there's no divergence, it's not valid. So right about here, you have a W for M formation with a divergence, a nice little breakout. Right about there, the structure kind of broke out, did the retest, started to consolidate. The consolidation went on probably about, started from here, it went all the way till 7 days. They did that over a whole 2 weeks. Okay, now here they did the stop hunt high because this impulse is a stop hunt. They did the stop hunt high, they did the smaller M, they have a divergence again, and then a collapse. So right here, if you're looking for a sell, you would sell here, you would sell here. You wouldn't buy, you wouldn't do anything over here. Now that consolidation was broken. As you can see, it's pretty much a nice consolidation was broken. You have a nice breakout right about there. Now you have a retest. Okay. Now, next is a big level 2 consolidation, which is right about there. The price kind of breaks below it, then it starts to consolidate in a sideways movement, which goes right like this. Okay, but then all this is just to collect money. That's all is to it. because when the price goes above the 200 EMA, it's inducing traders to go long. That's all they're doing, because it's a breakout strategy. Retail traders use that using indicators. They're buying here, they're buying here whenever it goes above it. So it's collecting money right about here, which is a nice area. But you know, as a trader, this is a level 2. Now it's a drop, and then once the drop is finished, you're gonna expect a W formation. Now you can see when there's a W, what do you see? A divergence. It's a clear divergence because the price is making lower lows. The price is making lower lows, but then the RSI is making higher highs, which gives you a validation of level 3, which is a peak formation low. So if you're a trader, if you're a market maker trader, the way you approach this right now, it's a good time, because what you're seeing here is a straight rise from the very beginning of the day. They went back to the low again to collect more money, collect more orders to get a better price. But right about here, you can see it's pretty much a nice bullish trend that's coming in, and it can stop right there, but I believe it's going to continue to go above, because the divergence is pretty huge. Means it's been collecting money since last week. Right about here, that's about 3, 4, 5 days, right? Another one right here, let's see. So 5 days, 3 and 5. So one whole week they consolidated. Okay, they collected orders right about there. That was your peak formation low. That was the area, which is 7675. They came back last week. They hit that low again to collect more money, because right about here, who's buying? Who's buying? Retail traders are buying. Why they're buying? Because it's a double bottom. That's where they're buying. But the moment they break below the low, who they are anticipating? Breakout traders. Breakout traders are selling it right here. Right about here, breakout traders are selling because the breakout happens, the retest happens, and they're selling, and they're happy because why? They're happy because the price went in their favor. But right on Friday, they collapsed it, and then today they took it all back. So if you're holding the trade over the weekend, which most retail traders do, they do hold the trade over the weekend. And most of the time they lose all of it back. Break even, stop now. Pretty much everybody lost their money. Now, nobody's in the game right now. Nobody's in the game. Here, what's happening is most retail traders gonna be looking for another sell opportunity, because why? Because it's a breakout, right? It's a breakout out of the structure of the support. Now it's doing a retest. Means it's an opportunity for a sell for who? For retail traders. But it's not an opportunity for us. It's an opportunity for us to buy. Because what cycle are we on? We are in MAAW and then WVVM cycle. So pretty much a nice little rise you can expect all the way till here. It can even go above it and beyond, because it all depends on where the level 1 is gonna be. Level 1 always has to be above this structure, which is the neckline of the W, means right about here. And you can have a level 2 here and M formation here, or it can be above it. But I'm gonna analyze it according to the price. I'm not gonna analyze it prior. I'm not a wizard where where I can tell you exactly where the price is gonna go. But I can at least anticipate where the price is gonna go based on the price reaction. So moving forward, this is what it's gonna look like. And if you're buying it, this is how you're gonna be buying it. You're gonna buy it here. You're gonna put your stop below the low, and that's where your security is, below the low. If you have your stop below the low, you should be fine. The price will never come back to it, because this was the last week's low. Friday was the last week's low. That's it. So they can't come back to the previous low if they already collected money from all this point. So this point was all money, 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 pretty much. All this was, okay, actually this. So right about here is all the stop hunt happened. And this is where the banks buy. This is where all the banks buy to book their profits, okay? This is where the bank buys. This is where pretty much they bought it here because they don't trade Fridays. I know that for sure. So because they have to book a profit, they close out. So when they close out, they pretty much, the price will consolidate, as you can see. Here is a nice level peak formation low, which is a W formation. So the next would be WVVM, and the cycle will continue moving forward, which is going to be a nice little rise, and target would be right about there, which is about 260 pip take profit and a 50 pip stop loss. So give or take, it's about 5% gain, 5.3% gain, and a 1% risk if you're trading at a 1% risk. Okay, but it's a good trade. 1 to 5 is a really good trade. Normally it's 1 to 3, but if you have 1 to 5, 1 to 10, it's awesome. It's awesome. Okay, so depends on when you were trading, but this is a AUD pair, means you were supposed to be trading at Sydney session, and that's where the as you can see, Sydney session was the timing. It pretty much moved. Sydney session opened up here, and since Sydney session opened, everything moved. Why? Because the Sydney banks in Sydney, when all the institutional trading it, they're buying it. They're buying against all the retail traders because retail traders are selling it. And there's not much pressure right now. So pretty much they ended up in a buy, and they're pretty much taking the price higher and higher and higher. And in this scenario, pretty much Sydney session would be the best time frame to trade this kind of pairs. AUD pairs would be the best to trade at Sydney session. CAD would be best to trade at New York. Euro is best to trade at London. GBP is best to trade at London. Then you have USD, which is best to trade at New York session. And NZD is best to trade at Sydney session. That's it. You have to know which pair to trade at what session. Otherwise, you won't be getting the best entry, right? If I enter now, I'm losing so much pip right now. From here all the way till here, I lost about 30 pips, which I could have made, right? But it's okay. But the thing is, remember, it's better to have an entry at the certain point, because when you do this and you lower your stop to 15 pips, your risk reward gets crazy. Look, now the risk reward is about 18. It went from 5% gain to an 18% gain, right? So it's very, very important what time frame you're trading. It's very important. So always know what time you're trading, so that way you can get the most out of the trade, okay? Because the market is not going to continue in your favor for that long, because it has to consolidate. The price has to consolidate. So you don't want to be in a trade when the trade is consolidating. You want to be in a trade when the trades are about to take off, excuse me. So this would be the best trade setup. I'm really loving it, and I'm gonna get into it tonight in a few minutes, but I believe it's gonna take off, but I don't care. I will use a proper risk management, which was gonna keep me afloat with zero draw. I mean, it will still make me money, but like right about there. Okay, so about 5% gain on this trade, which is really good. So 3% gain on AUD. AUD NZD has a 5% gain, which is really good. We're gonna go on to the next one, which is the AUD pattern. So let's move on. Okay. Okay, let's see. Right about here, we have peak formation high, level 1, level 2. You have a W, level 1 consolidation. Okay, reset. This was a reset. W formation. Okay. All right. So this wasn't clear. So right about here, this is level 1, stop and low. This is the level 2. Came back down. Wow, I can't believe this. Okay, so pretty much level 2 did the retest. I mean a reset. Sorry, not a retest. Reset. Most people don't understand the reset concept, but it's a little bit different approach. But you will get to it a little bit later. But when a reset happens, you're gonna see the patterns forming. So right about here, I'm gonna move back to the candlestick so you guys can see. So this is the level 2. When the level 2 happened, uh right about there. That was a level 1 consolidation. So this was the peak formation. They used it on the multi-week, means they used it from the last week's Friday high and Monday high to validate the information right about here. It has the validation of a divergence like I was telling you. Then you have a level 1 consolidation. Then you have a level 2 consolidation which was formed right about there. Okay, and voila. All right, now you have a peak formation low which was right about there. Now what you're going to look for is a bullish cycle. So the bullish cycle is not clear, but it's pretty clear to me, but for a lot of people it might not be clear. But here, there, so you have level 1 consolidation, level 2 consolidation. The peak got tested. You have a high right about there, which is, gives you the divergence again. You got an M formation. Now, after that M formation, there was a big drop, the impulse drop. Then you have a level 1 consolidation, which happened here. You have a retest. And then you have a level 2, which is probably, okay, what am I looking at? Okay, there we go. All right, cool. Right about there. Oops. So right about this consolidation is, so okay, before that, I need to do this. Uh, one, that's gonna be 3 and for 5 days back. So that's gonna be one whole week. So for a whole week, what did they do? Three, actually one more time, 3 and 4, 5 back over here. So you have 1 week cycle, 1 week cycle, and then next week coming up. So you have an M formation, you have a level 1, you have a level 2, now you have a W. Now the W, do you see divergence again on a W? Of course. You big fat, I mean, I call it a big fat W because of the divergence. It's pretty gnarly. You can see it's pretty crazy amount. All right, you can see pretty much the W formation is formed right about there. It has a nice little divergence, which validated, uh, the reversal point right about here. So that's nice little W. And what you can see is pretty much right after at the opening, the price kind of took off. So you pretty much have a setup right about here, which is bearish structure right about there, which is a MAW. Then you have a bullish structure right after that, which is the WVVM. Now you have a bearish structure again, which is the MAAW. So now you have a pattern, and it's a continuation pattern, right? So MAAW, now the W is going to take off, and that's going to be a takeoff with WVVM. So the resistance point would be my take profit area, but it's not necessarily my price going to go back till here. It can stop here and reverse, but I trade based on where the levels are forming and where the level is going to be stopping. So my expectation is level 1 to form right about there. After it hits 200 EMAs, you're probably going to consolidate and probably end the week. Probably, I'm not sure, but we'll anticipate it based on the price, how it moves. But level 1 is most likely going to be here. Level 2 probably here. Probably M formation back into the resistance area, but we don't know yet. We only have to analyze it and move accordingly. But pretty much you can see it's a bearish structure. Now we have a bullish structure. And if you're buying it, where do you buy? You pretty much buy in here. You put your stop right there. Perfect. Below the low. And then take profit at the highest point. But the take profit can vary. Remember, it can vary. It all depends on the level. But right now, at the moment, I'm going to have my take profit there, because you never know, because sometimes the price can just take off. Like in 1-2 days, it will just boom, take off. Like this part, this area, in 1 week, in one whole week, it dropped from this area all the way till here. It means 250 pips it dropped in one whole week. So it needs to collect all that money back by reversing back into the range. And you can see, you're probably going to see that happening. Okay, so we have a pattern. So I'm going to validate that and bookmark it. so we can come back to it throughout the week and watch it and how it moves. But overall, it's pretty much, you can see it's pretty much has a nice structure to it, and it makes sense when you're looking at it. When you don't mark up your charts, you're gonna scratch your head like a monkey. You're gonna be like, what the hell is going on, right? You're not gonna know where the price is, you're not gonna know where the structure is, you're not gonna know anything. But once you start to mark up, it's all gonna make sense. It's all gonna come to you. It's all gonna make sense to you, okay? All right, so moving forward, man, it's gonna be a lot of work. Okay, let's go. AUD CHF. Okay, give me 1 second, okay, guys. I want to do something now. I don't want to miss out on all these trades, to be honest, because I know how the pairs move. I might have to take a trade right now. So give me like a few minutes. I'm gonna take some trades and then I'm gonna continue, okay? So starting from AUD. All right, okay. So about 10,000. Divided by 30, it's about 333. Okay, so 333 is about 300, 300, 300, 333 times 3, 900. Okay, so this is about 28 pips, 92 pips. All right, so if you have account size, the risk is about 333 is about, let's see, 1,000. It's 0.30, I think, times 0.30% equals to 333. Okay, so 0.33. So I take a risk of 0.33, but if you're a beginner, I would suggest you to take 0.10. That would be your best option, okay? And that would be the entry. It's about 930 pips. Take profit about, it's about like that, okay? So you have a nice little numbers, and I always try to make it even numbers, so that way it's like, it's good because institutions they take a profit around that numbers, so which is good. So if I take this right now, I'll probably risk about yeah, all right. So 28. Let's see what kind of lot size, entry price, visibility. Okay, price ticks. All right, so 333 divided by, so it all depends on how you trade. So for an example, okay, if you have $1,000 account, this is how you're gonna approach it, okay? $1,000. Now think about it, 0.10. 0.10 is about let's see, 10,000 times 0.10% is about what? It's about $10, I believe. No, hold on. 1,000 times 1%, it's about $10. Okay, $10, it's about $1. Ha! All right. So basically, you're gonna take a risk of $1. It's very low, but you can go 30. You can go yeah, you can go 30. I think I mean, 0.10 is too low. You're not gonna make. I mean, you have to trade a lot to do it, but I mean, the thing is the reason why I tell you is because you need to get experience. You need to have a lot of experience in trading. Means you have to probably take hundreds of trades before you believe you understand it.
it's going to take a time. It's probably going to take you about 6 months to understand the concept. So you can't rush it. So, but the thing is, meanwhile, you do want to trade, right? So, or you can, the best option is this. What I tell all my students is this: 3 months of studying, 3 months of continuous studying, no trading at all. Like you're not gonna place a trade at all. You're only gonna come on your chart. You're only gonna mark up your chart and you're gonna look at it. That's it. For a whole 3 months, you're gonna study, study, study. And then after the third month, you're gonna trade on a demo account for 3 months. And that's gonna build up your consistency and build up your accuracy. And once after that, you can start trading with a live account. And when you're trading live account, then you can go 0.30. 0.10 would be best. Do it for a week, do it for a whole month. And if you feel comfortable, then go 0.30, which is good number, okay? And then you can increase it little by little. After that, you can increase it little by little. That way it's like, it's pretty much, you can easily probably make some profits over time by trading it a lot more. But the best is 1%. But that's going to come from experience and accuracy. And once your accuracy builds up to it, then you can do that. All right. So probably looking at 0.10, it's about, you're looking at about $3 risk, I think. About, you're going to risk about 0.30 times 0.30% is about $3. Yep. But then 3 times 3 times 3 is about 9. So you're probably gonna make like about $9 on this trade. All right, which is really like about 1%, to be honest. Like $9 is 1% gain. So all you need is about 10% a month. That's what your target is, right? So 1% a day, that's all you need. So it's about, all you need is like 10 trades to make 10%. So sometimes you're gonna get a little bit more from the trade itself, like about 5%, 10%, 18%, 20%, like the max. Like you can have a good risk reward ratios. It all comes down to it. But it all comes down to you as a trader, like how, like be consistent at it. Like don't fluctuate your risk. Like, because a lot of people, like when they feel confident, they go higher risk. When they don't feel confident, they go lower risk. But that fluctuation messes up with you a lot. So you always got to be consistent at your risk. Means pick a number first. Like, okay, and based on your experience too, pick a number based on your experience. If you're really starting brand new, I would say 0.10 is good. But if you're a little bit experienced, if you have a technical background and you're getting into the market maker strategy and you studied the market maker strategy, then you can do 0.30. And then once over time, when you get better over time, then you can start increasing a lot size over time. Okay. So I would say 333 divided by 20. So 300 divided by 28. So it all depends. But the thing is, like, for an example, if you're trading, like, for an example, if you're trading a $10,000 account, $100 would be your risk, right? That's 1%, based on 1%. Okay, 1% would be $100. Now, how would you defer your stop loss and what was your lot size? You can go on baby pips / calculator, lot size calculator. You can find that and you can do that manually, or you can open up a calculator, and this is how I do it. I calculate it like this. So right about here. So this is my balance. For an example, 10,000 is my balance. What I do is 1% is my risk, okay, which is about $100. Okay, so now what you do is $100. You're gonna divide that by the amount of pips is the on risk. So right now, how much pips are you risking? 28 pips. So you're gonna divide 28 by 100. So 100 divided by 28 equals 3.57. Okay, 3.57 is your per pip. Okay, that's your trade lot size. I mean trade. That's a profit margin, right? So equals that. If you want to do a lot size, then it would be 0.35. Okay, that's gonna be your lot. Okay, that's gonna be your lot size. So that pretty much that's how you trade. Okay, that's how I calculate it. That's how I met. I basically I don't use the calculator that's on baby pips, but it's easy for me to do it this way. But you might do it that way. It's okay, no big deal. It's not really doesn't matter. But you can pretty much, it's a very easy calculation. It's like you're risking $100 on 28 pips. You got your pip value. Like if you wanna less complicated, you can do this for an example. Like for an example, 28 pips is about 280 points. Okay, 280 points. So you're gonna divide 100 divide by 280, you're gonna get 0.30. So you don't have to like figure out the difference like that. You can completely do it like this. Okay, that way you get your right numbers if you don't want to do that. So that's a pip value because you're calculating as a pip, but it's more about the micro pip. That's how you calculate it. Okay, and then you get your lot size pretty easily. All right, guys, so I'm gonna move forward. Let me place my trades and then we can talk more. Give me a sec. All right, okay, so 300 divided by 28, so 0.10. So I have a standard lot. I can do 1.07. Okay, 1.07, which is AUD USD. Trade it. 1.07. Okay, now my stop loss is at, all right, stop loss is 70320. 320. And my take profit would be about 71530. 71530. But remember, the take profit will differ based on the level itself. But that's my average is about there. But once the M is formed, I'm gonna exit. So just remember that, okay? Seven. What the? Oh, 7153. Okay, 71530. Okay, good. All right, I'm in the first trade of the day. All right, next would be AUD NZD, and that would be a nice little pattern to itself. Okay, let's see. Right about here. Okay, and then there. All right, so we have about all right, so probably 5.5 would be best. Ticks. All right, 49 pips is what I'm looking for. Probably 50 pips would be even better. Okay, so 50 pip take, 50 pip risk, 260 pip take profit, which is really good number. And that's for AUD NZD. So let's get that calculation up. So 300, 333 divided by 50 equals 6 lots, $6 per trade, 66. Okay, about 66.66. My risk is about 715. Okay, 7155. Take profit is about 10265. All right, done. Okay, all right, next. And then the AUD CAD, we have a nice one. This one is really nice, but the pip difference is very high. Actually it dropped, so it's better. Okay, it dropped, it's better. So means I can lower my risk a little bit more and drop it all the way down, which is about 50 pip. This one too. Profit target is right about there, which is about 209 pips, which is about 210 to be exact. This would be 0, boom, boom, boom. There you go. Da, 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 da. All right, so there we go. Now we have 50 pip risk on this one. 200 divided by 50. 50 equals 6. Bus. 333 divided by 50 equals 66. Okay, this one is 66 as well. All right, so AUD CAD 66. Wow, crazy numbers. All right, stop loss would be 93900. Take profit would be about 96500. All right, good to go. All right, so we are in 3 trades right now for the day, and we're gonna see how that plays out. Okay, I'm gonna update you guys. Don't worry. But I'm only gonna update how the trades are moving. But that's about it for the rest of the week. That's all it is gonna be because you guys know what's happening right now. So, okay. All right, that's done. So we have our setups. All right, next one would be AUD CHF. Okay. 1 2 1 1 2 1. All right. So we have, okay, we have a setup. We have a setup. Okay. Too much noise. Let me delete all this noise. Okay, so this would be a one hole consolidation. Starting from here, as you can see, pretty much the M formation, this was a peak formation high, right about there. That was a resistance area, right about here. And then right after that, pretty much you have an M formation, validation of the divergence, perfect. Level 1 consolidation, perfect. Level 2 consolidation, perfect. Then you have a W formation, which is a one-day W. That's why the price came back to hit the low again, and that was perfect as well. And that was basically the support area for you, and pretty much a lot of retail traders trade that. But right about here, you have a bullish cycle. Right about here, you have a bearish cycle. Okay, so you got what you needed, which is a W level 1, and then right over here you have a level 2, which formed right about there. Okay, and right after that, you can see pretty much the M formation was created right there, like right there, and exact. It has a divergence as well, perfect. Now you have a nice level 1, but let me zoom out. Okay, perfect. So this extended pretty much longer, right about here. You have a breakout and a retest, perfect. Now what you have is a nice level 2 consolidation, which is right about there. So this would be a level 2 consolidation, which I'm not looking to trade because it doesn't look that great. Because from what I'm seeing is this, it will do that. Okay, so it's not much room for me to make profit and expose myself into a trade, because if I put my stop here, the risk reward ratio is not that great. So I'm not gonna trade this. I'm probably gonna keep an eye on it, which is really good trade though, to be honest. But it needs to drop, and then once it drops, when it creates a W, then I'm gonna look for a buy opportunity. But right now, yeah, right now it's not that great. Okay, so I'm just gonna leave that alone, and we're gonna focus on the next one. All right, AUD JPY. So we have a setup. I believe this was a retest. Let me check. Okay, we have a level 1, level 2 coming in. Okay, so peak formation low, level 1, level 2, we have an M formation, then we have a level 1 consolidation. We had the stop hunt high, which was really great, right about there, which was really good. But then the week kind of ended right about there, and they did a reset. Reset happens, and when the trend, when a level consolidates for too long, it's a reset. Okay, but the thing is, you will know when the reset is, because it will break through the levels. And if you have a stop above it, you're fine. You're still fine, because you're only gonna lose like a little bit. You're only gonna lose probably 0.30, 0.10. That's about it. You're not gonna lose much. But imagine, in this scenario, you expecting the price to go very, very low, which is good. But when the price goes in your favor, you as a trader, you need to secure your profits, right? So the thing is, what we do is, when we trade, once the trade moves about 50 pips in profit, we move our stop loss to break even. And then when the trade goes into a level 1 consolidation, for an example, if you're trading here, short, if you're trading, for an example, right about, let's see, 1, 2, 3, 1, 2, 3. Let me zoom in. Okay, if you're trading right about anywhere here, doesn't matter, but, and it goes into level 1 consolidation right here, this all area is your take profit area. That would be your take profit 1. Take profit 1 goes onto level 1. And then when the price drops again, you're going to book your take profit 2. And when it goes to level 3, you're going to book your take profit 3. So if the price, even eventually, it will, if it comes back to your entry, you only lost $0, and you made a profit on the way too, because you booked partials, right? When you book a partials, you make money, and at least you didn't lose anything by having a break-even stop. And then when the price comes back here, you can sell it again, and you made some profit there. And if you didn't close anything, then you broke even. When? Few weeks later. Okay, that's when the reset happened. And you can see pretty much the reset happened here. That would be a reset. So whenever the reset happens, you have to identify your level 1s and level 2s again. And right about here, you can see this is the level 1, peak formation high, which is an M formation. You got yourself a divergence again. Boom, boom, done. Now you have a level 1, which is right about there, going sideways. This area was a stop hunt. As you can see, the stop hunt has a W and a divergence, because it's collecting money. That's all they're doing. They went back in the range because they collect sellers here. When they break the price lower, they collect sellers. They bring them back into the range, get them out. That's it. What they needed, they got what they needed. Now, level 2 would be right about there after the breakout happens right here. You can see the breakout happens right there. Boom. Okay, now this would be a level 1. Level 2. And then the peak formation low is happening right about here, which is the support area. And now this would be a nice setup for a buy, but it's not ready yet. Okay, it's not ready yet, because it needs to do a stop hunt, which we haven't seen yet. All right, if you look at here like this would be M, A, and a W. W needs to come back to the support area again, because this was the last week's low. So it means it has to come back to the last week's low again, and to validate it. So 3, 4, 5, about here, another one right here. So all week long, last week, they did this, they dropped the price low, 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 low. They stopped the price here. So the price needs to come back, hit that support area. You can call that if you want to, but they're gonna have to break it a little bit lower. And once it breaks below it, they're gonna consolidate. They did the stop hunt. Once the stop hunt is done, they're gonna push the price higher. But right now, as you can see, the divergence is pretty visible to you. Okay, the divergence is pretty visible, and you can anticipate like that. So the price needs to come back a little bit lower, about, I don't know, probably about another 50 pip, probably another, about 50 pip drop. That would be a 50 pip stop hunt area. And once it comes back to that low, Once it comes back to that low, you can start buying that trade. Okay. All right. So right about there would be your buying opportunity. But right now it's not a great buying opportunity. You just got to wait it out. So most likely, I would say most likely it would probably gonna be tomorrow because of the AUD and JPY, because AUD is a Sydney session and JPY is a Tokyo session. So it has to play accordingly. Now, 15-minute would be the best time frame to go on and look at it. As you can see, Sydney session, what they did was they created the intraday information, which was right about there, and they're collecting orders. This was the stop hunt high again, and they're dropping it. So it could drop over here, probably consolidate, or it can just consolidate over here, probably in a sideways range, right, like that. So basically Sunday, Monday is what you go for, and right about here. So this is a consolidation phase. It needs to break out of it, probably hit the low again. So there's like a whole big lows right here, right about there. This is a whole, like that. You see that? All right, perfect. So once the price comes back into the range in this area, anything lower than that is better for you. But if it comes back in this number, which is about 73956, when it comes back, hits that low, you can start to look for a buy. But after the stop hunt, once the stop hunt is done, then you're gonna look for a buy, okay? Before that, you're not gonna look for a buy. Otherwise, you're gonna be trapped, okay? Trapped in the consolidation phase. You don't wanna do that. So let's see how this will move, but I'm gonna mark that up and I'm gonna trade that accordingly, probably coming, probably tomorrow or so, okay? I don't trade Bitcoin, but I just use it to analyze it for my bigger cycle, but it's more about, but Bitcoin also has patterns as well, which I marked up in the past. They do tend to play out pretty well. Right about here, you can see Bitcoin had a nice, it does it on a bigger time frame because Bitcoin is moving like, it moves like a stock. So it's all about liquidation and consolidations. As you can see, this was a peak formation low, W formation, neckline breakout, level 1 push, level 2 push, M formation. They couldn't, they have enough money. So what they did, institutions start to sell. Now you have a level 1, now you have a level 2, you got a W formation, then you have a peak with level 1, level 2, I believe level 1 is right here, level 2 is right here, M formation is right there. Actually, never mind, hold on. Those are the smaller impulses, okay? Right about there. Okay, so M, level 1, level 2, this is a stop hunt, stop hunt, stop hunt, and then a drop, peak formation low, W formation, then a nice little rise, M formation. And now what we're looking for, if you see this is an M formation and it has a divergence too, it's funny. It's very, very funny. Okay, so you have a divergence. I'm just analyzing it. I don't trade it, but I know a lot of people trade it, but here is a drop. That's going to be a level 1 drop, and that's going to be a consolidation phase. This is a stop hunt area, which is the M formation, stop hunt, divergence, validation. Now, what you're looking for is a short selling on this opportunity, and you're going to look for that. It could go up, probably to do a stop on high and drop. It can do that too as well, but it all depends on how the structure is, on how much money is available. But most likely it's not going to come back to this low because it's done for, basically it's done moving. It's probably going to come back a little bit lower than this. That's it. Probably create a level 2 right about here anywhere, and then W formation and take off. And you can, I mean, predict where it's gonna go, but it really doesn't matter. But here it's a 61.8. It can come back to the 61.8. That's a majority of the retail trader setups are, but right about here is the opportunity. So probably about 7,000, 6,500 would be the area, would be the best area to buy Bitcoin. And then it would be continuation trend, because on a let's see, on basically a daily cycle, it's still an uptrend. Okay, because when I analyzed it long time ago, it's pretty much it's in a cycle, which is um, right about here is an information, right here is at level 1, and then level 2 right about there. If I zoom in, you're gonna see it. Let me show you. Information, level 1, and then you have a level 2 consolidation, then you have a peak formation low right about there. Okay, so it's basically a bigger cycle. It's just playing out accordingly, but you're probably gonna see a little bit more drop on the Bitcoin before it's gonna take off. But most likely it's gonna take off, because the thing is, as you can see right about here, it's a big trend. It's a big trend, but nothing is inevitable. I don't know how I can't say the pronounce it but very well, but it's pretty much like nothing less is like there's no guarantee that the price of the Bitcoin gonna go back to the 20,000 and above and beyond, but there's a chance of the price coming down, going back up, coming down, going back up, but it's all gonna play out according to the volume. And you can see now it's like since we on a daily chart, you can see the levels are pretty clear, very clear to you. It's very clear. Like, I mean, I can't say anything better about it. You know, it's pretty clear. All you have to do is just identify those levels and just consult and then trade accordingly. Okay, so Bitcoin is good, but don't buy it. If you're short selling it, which is good, short sell it. If you want to book your profit, if you have bought Bitcoin, uh, you can start closing it because it might drop a little bit more. Okay. All right. Next one is about uh, CAD CHF. About 1 hour time frame. Okay, what's going on? All right, hold on. All right, so we gonna look at CAD CHF right now, and from looking at it, we have, okay, so we are pretty, all right, so this would be your level 1 consolidation going across. All right, so basically information right about there. Level 1 is right here. Then you have a level 2 right about there. Then you have a peak formation low right about this corner. Okay, that was a W formation. You have a divergence validated. Okay, to validate your W, you always need a divergence. Okay, once you have that, pretty much you can see this was a nice level consolidation, and I believe this was a whole one big consolidation area. This was a retest, but you can see right about there. Okay, so pretty much a big level 1 consolidation. After that, you have a nice level 2 consolidation right about here. Okay, and then you have a nice M formation at the very top. You have a nice resistance area right about there. The price went above to do the stop hunt, and then it dropped. Now, after it dropped, it broke the neckline, and then it started to consolidate in a sideways range, which went like this. So what the price is doing currently, you can see it's going back up to the high to do the stop hunt high. Now, there's two scenarios. In level 1s, the price can
go back all the way to the high and then drop, and then, or it can create an M formation and then drop outside the level 1. Means outside this range is the consolidation. This is where the money has been trapped, right? This is where the liquidation is. This is where all the volume comes in. But here is your, like that. But and this would be your take profit area right about there. So pretty much if you're looking at this pattern, what we have is a nice bull run, which is WVVM and then MAAW. So the first level might have a stop hunt, and once the stop hunt is done, then you can anticipate in the drop. So from what it looks like, the M already had what it needed, like basically like three hits to the high, 1, 2, and 3 times it went to the high, means it collected so much money. That's why you can see a big drop right about there, and then a consolidation and a big drop. So it validates it, but then you have a consolidation area right about there, and when they broke out of it, they induced a lot of buyers. So there's a lot of possibility that the price only gonna go to this highest point, because right about here is your Sunday, Monday, then this was last week. So all last week what it did was a consolidation, stop hunt low, rise, stop hunt, consolidation, and a rise. So they chopped the price on, basically buyers are in this game at the moment. All the buyers are trapped. So if all the buyers are trapped on Thursday and Friday, uh, like, because the thing is this, like when you're looking at a retail trader, he's going to mark up the charts like this, or he's going to mark up the charts like that. And when he marks up his charts like this, he's looking for more buy opportunity, and it could be the opposite, you know. So you always got to do what the retail traders are doing, but always the opposite. Okay, always the opposite. Right about here, this area is a consolidation area. Okay, so this is a selling area, like, and if the price kind of rejects off of that level, if it rejects off of this consolidation, this is a big consolidation, but here, if it reacts to it, like if it respects the high and then continues to drop, you know what level you're in. You're pretty much in a level 1, so means you're gonna have a nice little drop that's gonna be about to be coming in. Okay, and that's gonna be a nice drop all the way till this low. And if that happens, you know which cycle you are in, pretty much right about there, and a short right about there, and probably about 25 to 50 pip take profit. I mean, oh, okay, you can do 25 on this one, and then a take profit all the way till here, which is 190 pips. Okay, 190 pips for a 25 pip is about 8% gain on it. Okay, 8% on this trade, it's very good. Better than 1 to 3, it's 1 to 8, which is really, really good. So I'm going to keep an eye on it. I'm going to trade that for the rest of the week, but my entry is going to be based like that. Okay, but but it needs to validate the stop hunt though. Okay, if it doesn't validate the stop hunt, you can't trade it. It needs to validate the stop, but most likely it might go here. But just remember, if it rejects off of it, you know what it is. Okay, what time it is. So it's a really good pattern, to be honest. It's really good. Okay, so next one would be CAD JPY. All right, let's see what we have here. Okay, this is the next level drop. Okay, so this is with the peak. This would be level 1. This would be the level 2. So, okay, now once the level 2 is formed, you can start to see the consolidation taking place. right about there, level 1, level 2, peak formation low, level 1, level 2, peak formation high. Okay, so this is the peak formation high right about there. You have a divergence on a smaller time frame. You're not going to see it on a 1 hour. It doesn't look 1 hour, but when you go on a 15-minute, you're going to see the divergence. Okay, I'll show you. And this was one whole week. From this point to this point was one whole week. So all they did was a stop on right here. Actually, it doesn't even have a, oh wow, it doesn't even have a divergence on this one. Okay, it could be the level 2 stop on. Let me check. Okay, makes sense. Okay. All right, so looks like we're in a big level 1 consolidation, but the level 1 itself had a trend to its own. So if you drag this across, you're gonna have a big consolidation, and this big format right here is an M formation. It has a divergence as well, but it went back to this high, not this high. It tried to go back up here, but failed because it has a lot of money, what they needed. So it's pretty much validated from that trend over here, which is a W, level 1, level 2. So basically it was a reset. Okay, a reset of the chart. Means level 1, we call it a level 1 reset. Okay, level 1 reset is going to look like that when the price kind of tends to go on a bigger time frame, on a 4-hour time frame. CHF, hold on,
Give me 1 minute, guys. Okay, 1 minute. Okay, so oh my god, I think we messed up. Did we mess up? I think we were in a CAD. Oh yeah, we were in a CAD JPY. Okay. All right, so pretty much this would be uh, level 1. Level 1 basically reset. So pretty much W, level 1, level 2. We have an M formation. Then we have a level 1, level 2. Okay. So pretty much right about there. Let's focus on this area. We have a level 1 area right about there. Then have breakout. Then we have a level 2 area and a breakout and retest. Now, right about here, it's right there. So you have a divergence as well, which is right here, right here. Uh, okay. So, all right. So pretty much we have a M, level 1, level 2, and a W formation. Next would be the neckline breakout, which is right about there. So it needs to break above it, but what we need to know is how the structure is going to be moving. 3 to 5, right about there. So we have a 5-day cycle. Okay, so W formation, they went back, consolidated, so means they did the 2 days of W right about here and right about there. Okay, so pretty much the area we're looking to buy is right about there. Okay, and if it goes back up, down in this area, you can end up buying it, but we need to wait for the price to come back to this low before we start buying it. Okay, so CAD JPY is another good trade, but it's not ready yet, but once it's ready, you can start buying it. Okay, all right, next one would be CHF JPY. Okay, let's see. Check AUD JPY is not ready yet. Okay, yeah, it's not ready. Okay, CAD JPY, CHF JPY, CAD. CHF. Okay, all right, CAD JPY. As you can see, pretty much I don't have to analyze anymore, but right about there is your level 2 consolidation. Right about here is your level 1 consolidation. You have a nice peak high there. So basically you have a trend, which is MAAW right about there, MAAW, and then WVVM is right about here. Okay, and then level 2 is right about here. And then you have a peak formation high is right about there. So you pretty much can see how the whole level is forming. And then once the peak formation high is done, right about here, let's see. Ta-da, ta-da, ta-da. Right there. Okay, so what happens? Pretty much level 1, this level 1, level 2, level 3 push. And then basically it's like this is a minor push, so we really not gonna count it. You can count it as a trade, but right now from based on the structure itself, it's pretty much looked like this. It's one big consolidation area, which is right about here. Yeah, it's gonna be a whole big consolidation actually, right about here. Okay, so basically M formation, a drop, and then a level 1 chop, which is a 1 push, 2 push, 3 push to the high. They hit the high again. They collected all the money they wanted. They dropped the price. As you can see, it's pretty gnarly right here. And then when they came back again here, they dropped it again. And then they dropped it a little bit lower to collect more money. They brought the price back into the range. So it means you're still stuck in the level 1. And then after that, you have a breakout right about there from the level 1 structure, which is the retest right here, level 1 retest. Now what you have is a level 2 consolidation, which is right about here. Okay, so we are looking at a much more bigger cycle. And let's see. Okay, yeah, so pretty much what you can expect the price to go probably all the way down. Okay, and this is really good. Okay, it's pretty much a straight drop because the thing is right about here you can see it's basically tested, then you have a nice little test over here and then a breakout. Means it will collapse a lot. It will collapse a lot. But let me check something else real quick. Yeah, it's still oh wow. Okay, so they're trapping. Okay, they're trapping all the sellers right now based on this. They're trapping all the sellers because you can see the W formation right over here. So it might come back up a little bit higher, but right about, okay, so level 1, level 2, this could be it right about here, like that. Okay, that would be your level 1 consolidation, level 2 consolidation, stop hunt high, and then drop, and then it will continue to, or it can continue to drop straight. But we don't trade level 2s because it's very tricky. That's why I'd avoid it. But I'd usually trade the peak highs and the level 1s only. That's it. I don't trade the level 2s because when you're trading it, you're exposing yourself a lot with the stop loss, probably sometimes 50, 100 pips stop loss, which is not reasonable. The average is about 25 pips stop loss. That's the average. But in this scenario, I'm just gonna avoid it. I'm not gonna trade it. I'm not gonna chase the trade. I'm gonna let it come down till here. And once it comes down here, then I can pretty much buy in and then go in go in that trade. Okay, so just avoid it for the whole week. But you can, it's still a good trade though. It's still a good setup, but just keep an eye on it. Okay, next one would be Euro USD. Okay, we have a much more bigger cycle, I believe, right here on an M formation. Let's see, level 1, level 2. Okay, so level 1, level 2, level 1, level 2, level 1, level 2, peak. Okay, level 1 reset, level 1, level 2. Okay, all right, level 1, level 2. Okay, right about there. Okay, so that's gonna be a peak high. Trying to see the pattern. That's gonna be peak high, level 1, level 2, peak high, level 1, level 2, peak high, level 1, level 2. There. Okay, so all right, so basically peak formation high, level 1, level 2. Now what you're looking for is a peak formation low right about there. Okay, now what you're looking for is a W formation. We have a divergence. I have to look for in a last week cycle, which is right about there, and then 3 to 5 days back, which is right about there. So pretty much looks like the whole consolidation started right about there. That was your peak formation low, because the thing is, when you look at the RSI, this is the lowest point, and you can drag it up, you got a divergence, pretty much simple. And now you have right here, Thursday was the low, Friday was the another stop hunt low, and then as you can see, pretty much the price went back lower to hit the low, but it's respecting this low from the from last week's low, and it's rejecting off of it, uh, which is, London is about to open up, which is really good, means it's about to take off on the upside. That's what my prediction is, uh, right about here. So pretty much we have a cycle of WVVM, I mean MAAW, then you have a WVVM, and then MAAW. So you have a whole cycle of the bearish trend. All you have to do is look for buying opportunity, and probably the take profit would be at this area. Okay. Okay, that's it. So Euro USD is looking good. Uh, and from what I can tell you is right now, it's good for a buy right now because it's about to take off. London session is about to open in 30 to 40 minutes. When it opens up, it normally gonna take off. Okay, so all right, let's get to business. There we go. All right, it's taking off already. All right, there we go. 25 pips is good enough for this price. This entry is 25. Take profit probably gonna be right about this area, the resistance area. Level one will always gonna be forming above it, right about here. So probably it's gonna blow the high. It's probably gonna take off. Um, probably gonna go even beyond the 2.12. So which is good, but we have a risk reward of about 300 pips on this trade, which is really good. Wow. Uh, about it's about 3, 16, 30, about 50, 270, about 250. Okay, so let's zoom in. All right, that would be your M, AAW, WVVM. Now 25 pips goes right there. Okay, so we're good to go on this one. All right, give me a second. I'm gonna place my trade and then we can move forward, okay? All right, so Euro USD about 333 divided by 25 equals 1332. 1.33, 1.33. It's about 1.33. Let's see, 1.33. Okay, stop loss is at, okay. So stop loss is 25 pips, which is 1.60, 6050. Take profit is about 966, 9650, 9650. All right, boom. All right, done. All right, next. Okay, slowly the other ones that we took a trade earlier are going into profit, but it's very slow, but I believe London session is gonna do its job and we're gonna move forward, okay? All right, next one is Euro CAD. All right, Euro CAD has a nice setup, which I can already see. It has a peak formation high, which was right there. Then you have a nice cycle, which was the bearish cycle. Right about here was a level 1. You have a level 2. Then you have a peak formation low. You have a divergence, lowest point of the RSI, and then a divergence. So now this would be your nice little divergence, and then this would be your low. Okay, boom. Okay, so Euro CAD. So it looks like all Euro pairs gonna go up. So based on that, you can analyze it too, but I prefer to analyze it based on the market maker setup. Let's see, 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, here. So the resistance was tested a few times. It hasn't broken yet, means we're still in the level, peak level consolidation. Okay, so opportunity is still here, but we need to view it. Let's see. All right, so where can we enter? We already missed out here last week, but let's see what we have. 3, 4, 5. 3, 4, 5. 3, 4, 5. 3, 4, 5. Okay, so pretty much 1 whole week rise, 1 week drop, last week drop. Not really, but okay. All right, so it's not a really good time to buy in, but there was a W here. That was a W here. Yeah, it's not a really great setup. Like, I mean, it is a great pattern right now, but the thing is, the setup wise, it's not that great. But if the price comes back, probably I believe it should do either one thing right here, drop to this low because this is the lowest point, and that's the peak formation low. And if it does that, then I'm gonna anticipate on the buy. But right now I'm gonna just sit it out and just watch. Okay, but it's a really good setup though. But once it sets up, then you can end up on a buy, and the take profit gonna take off because the thing is they collected so much money here, you have no idea. So there is a huge potential for a buy, but 15 minutes is consolidating, means if it takes off to the higher highs, then you can anticipate in much more take it will take off for sure, but it all depends on how it's going to form though. Because the thing is, like, when you enter right now, you have to expose yourself a lot more, right? You're going to expose yourself about 130 to 40 pips, which is not good. Regardless of the take profit, it's about 2.4, right? But imagine if the price comes back to this point and then you lower your risk a little bit more, uh, about 25 pips, and now you have a better risk reward. It's about 13, right? So it's much more better to wait than to chase your trade, but just let's see how it goes. Okay, EuroCAD is looking good, but I'm just gonna wait it out for a minute. All right, next one is EuroCAD. All right, so this is a peak formation high. We have, okay. We have a level 1, level 2, peak formation low, level 1, level 2, peak formation high. This pair, I don't like it because of the CHF. It contains a less liquidity. Means not a lot of people trade CHF. That's why you don't see complete patterns, and that's why it's like it just moves the way it moves. But you're still gonna be able to find something. When you analyze it, you're gonna find something for sure. Right here, so that was a stop hunt high. Level 1 is consolidating in a sideways movement. Right here is your peak formation low, which was right about there. That's a W formation. That's your level peak formation low. And then this would be your level, this would be your level 1 consolidation. So we have a nice W formation, we have an M formation. So we have a cycle, which is a bearish cycle, MAAW, and then now we are expecting a nice WVVM pattern. Okay, so this is a level 2 structure right about here, and then pretty much you can tell what's going on right now. It's gonna be a nice little rise. We're testing that. So uh, but it is a high risk trade, to be honest, because the thing is, like, you're exposing yourself a little bit more, but it doesn't matter. You take a loss, but no big deal. It's only like 25 pip. Yeah, it's about 25 pip stop, about 66. So it's not even a 3% gain, but it's okay. It's okay. Like, we can trade this still. Uh, I'm gonna trade it actually because it looks good though. It looks good. It has a nice retracement to it. It hasn't blown out the 70, means it still has room for growth. Right about here. What's going on? Okay, so peak formation low. Okay, MAW, WVVM, we have a nice setup. Let's mark that up and let's trade that. Okay, so next would be 770 pip, and then 25 pip right about here. Okay, all right, we're good. So we can trade this one. Give me a second. I'm gonna place a trade and then we can move forward. All right, 333 divided by 25 is about 13. 133. 133, it's about Euro CHF. All right, stop loss goes at 785, 7835. Then take profit goes at 8785, 8785. All right, done. Okay. All right, we solid. Okay, we're good. So, all right, next would be Euro GBP, which was looking good already last week. I was analyzing this pair, and pretty much we had a setup that was rising from here, which was a W formation with a divergence. We had a level 1 consolidation, which was right about there. Then we had a level 2 consolidation, which was right about there. Then we had a level 1, which was right about here. Then we had a level 2 right about there. Um, okay, nope. Actually, I'm wrong a little bit. All right, I analyzed it a little bit wrong. Okay, so right about here, you can see the breakout happens. Level 1 starts to consolidate. This was a breakout retest, so that was a perfect time. Then a drop. W means a level 2 has a much more bigger retracement. So that's the reason why when the W was created, the price kind of went higher, a little bit higher, a little bit higher, but it really didn't go all the way till this point. Consolidated. It means consolidate in a sideways range, but at the same time, if you look at it, it's in a level 1, it's in a level 2 consolidation. A big, this would be a nice little profit booking right here for that particular day. That's about it. Okay. Here is your range, which is right about there. This was the stop hunt area. All of it was a stop hunt. All they did was collected orders all the way long. Last week they collected orders. Right here, divergence validates that, the pattern. Okay, so this week they gapped down, but then the price kind of tended to go up. All right, let's see. Yeah, okay. So pretty much, yeah, we're in a level 2 area still. Yeah, we're in a level 2. All right, so pretty much I'm not gonna trade this one, but if you wanna, let's see, to look at the Heikin-Ashi, you'll know better. Yeah, it's pretty much a sell. You can see that it's pretty huge drop. So it's most likely aiming for a little bit lower lows, right about here, but not all the way here. Maybe it could be, but the thing is, like, remember all the time, it's all about the impulses, right? It's all about how much big the impulses are. Right here, let's see, 1 all the way here. Yeah, there's a possibility. There is definitely a possibility for the price to go back all the way to the support area. But this is pretty much how it's gonna be looking like for the rest of the week. I'm only going to go bearish on this one. I'm not going to look for bullish. Even if it goes up, I don't care, because the thing is, um, it's basically we're in a level 2 consolidation. So anything above and beyond, it's not going to be, it's only going to be a stop hunt. But they already did the stop hunt last week, which was right here. Okay, so I don't think they're going to go back again to do the stop hunt. It's more likely going to be a drop, because they induced traders to go long last week. So most likely it's going to be a drop. So selling would be the best option here. Now selling where would be the question, and where to enter would be the question. So short, for an example, if you do short it, about 60 pip is too much. Okay. I think 50 pips would be the best, but let's see. Okay, 15-minute. Okay, in a 15-minute range, the price has been consolidating from this area to all the way till this area. So means the price hasn't broke out of the structure yet, but if it does broke out of the structure, most likely it got 1 more minute left, like about 2 more minutes left, but most likely it's going to be a continuation drop. It might go back to the right here a little bit, but from what it looks like, it's last week's low is right about here. This is the last week's low, and what they did was they went back up, tested the high, tested the last week's low, and then pretty much dropping it down. So it looks like it's market makers are inducing traders to go long or short, doesn't really matter, but from what it looks like, it's going to be a nice little sell. So I'm going to go ahead and take a trade on this one, because this one is a 50-50 chance. We might win, we might lose, because I don't like to trade level 2 like I told you earlier, but when there's an opportunity available, I take it. So 50 pips is a good number for this one. It already has like about 220 pips take profit, which is really good. Okay, so which is a 4-to-4 risk reward ratio, which is really, really good. Okay, so what we're gonna do is we're gonna take a trade, and then we're gonna move forward. Okay, give me a second to place my trades. Euro GBP chart. All right, trade 50 would be about 333 divided by 50. It's about 666. 66. Okay, now, all right, a stop loss is 91580, and then take profit is about 8888. Okay, and you can sell it. All right, done. Okay, all right, on to the next one. Euro GBP, sorry, Euro JPY. Let's analyze this real quick. Okay, so we had a trend that was going on over here. We had a peak formation high, level 1, level 2, W formation. We had a level 1. I think we had a level, yeah, level 1. We had a level 2. We had an M formation. The M formation wasn't validated, but then it got, then it had a, what do you call it? Reset, and then the price kind of went forward. Let's see. That was a retest, so probably a push. Okay. So how many push we got? Okay, so basically right about
This was the highest point of the chart. Okay, so let's zoom into the smaller time frame a little bit. Okay, trend. All right. So peak high, peak low, level 1, level 2. This one has a divergence or what? Okay. All right, yeah, we see it. Okay, I see it. All right, there we go. So W, level 1, level 2, M formation. And then we have a level 1 formation right about there. This was the stop hunt, W, perfect. We're making sense. Now we have a level 2 right about there. Ooh, okay, okay. Wow, wow, wow. We're good to go, man. Euro JPY, buy now, buy now, buy now, okay? Buy now. It's ready. You can see that already. I can see it. 15-minute Haikinashi, boom. You see that blue one? That's perfect. It did the stop on low, perfect W formation for the intraday W, and that's a really nice setup. Crazy, crazy. Okay. All right. So it's much more smaller. Like we were looking at a much more bigger pattern, but once the reset happens, then you ignore whatever happens, and then you look for the peak, you look for the cycle, then you continue after that. So we have an M right here. We have an M formation right there. We had level 1, level 2, and the peak formation low. So it gave us a nice MAAW pattern. Then we had a WVVM pattern. Then we are having a MAAW pattern, which played out pretty well. And right about there, 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 there. Okay, so we have a cycle right here, a nice little cycle. So now we're gonna go for this one, which is the lowest point right there on the candlestick. Okay, taking off, taking off, taking off. All right, 20 pips. That's it. That's all we're gonna risk, I guess. Let's see, option R. Oh yeah, look at the candlestick. It's 20 pips. All right, guys, 20 pips. Euro JPY, 333 divided by 20 pips. It's about 16, 1.66. 333 divided by 20 equals 166. 166. All right, 166. Euro JPY, 166. All right. 20. Okay, 122,390 is the number. Okay, 1 hour time frame. Now your take profit is gonna be amazing. Look at it. Boom. So look at the risk reward, 22. So we have a risk reward of 22% on a 1% risk. That's what you're looking for. These kind of setups that we look for all the time. It's like one of the best ones, to be honest. Right now, it's one of the best ones right now. So, okay. So we have about 20 pip in risk, 400 pips in gain, and it's not gonna continue to go all the way through. It might go like that, and then it might go like this, and then it go like that, but it all depends on how the price is gonna move for the rest of the continuation. But the take profit is gonna be here. It can be lowered till here. It all depends on how the consolidation forms, but overall it's looking good. It's gonna be about, yeah, it's the take profit on that one is about, let's see, Entry price is about 7.5, and then this would be 4,200. Okay, so 420 would be your okay. So 126,775. Modify. Done. All right, done. Okay. All right. So Euro JPY, we have a nice trade going. All right, on to the next one. Euro NZD. Okay. All right, we have a W formation. We have a level 1. We expected the level 2 to form here, which exactly what it did. And then we have an M formation, like we expect, right about there. That's perfect. Then we have a level 1 consolidation. Level 1 consolidation took place here. Level 2 took place here. Then we have a W formation right about there. Okay, so perfect. Now we have a level 1 right about there. We have a stop hunt low. Perfect. Perfect entry. And then now we're looking for a breakout right about here from the structure. So level 1's gonna be right about there. So it's gonna be a nice little continuation pattern. And from a Euro NZD perspective, we have a W, level 1, level 2, information, level 1, level 2. Okay, this one is not an optimal entry. If we enter here, we have to expose ourselves quite a lot. So it's much more better if we just wait it out and just let it be the way it is. But the pattern is there. So the overall trend is WVVM starting from this point, and then MAAW was right about there. So it's going to be continuing, but the thing is we need to have a better setup, like a better entry, so we can take that trade. But right now it's not available. We're not going to take it. We're going to focus on the other ones. Okay. All right, next we have a level 1 right about here. Okay, and then we had an M formation. So pretty much M level 1, level 2, W level 1, level 2. Okay, now we have an M formation here. We need to identify the M's right about, believe, right, resistance is right there, right about here. So that would be your M. That would be your highest point. Okay, so that's an M formation. We have a breakout right about here. That's a consolidation area. Right here was a level 1. Right here is your level 2 consolidation. Oh no, hold on. Yeah, right here was your level 2 consolidation. Okay, so pretty much they took one whole week to create the level 2. They did the stop hunt low to collect more volume, more liquidity basically. Brought the price back into the range, continue it to the lower lows. Did the stop hunt, so right about here was the lowest point. and that's when the price kind of broke out of the structure as well, right about here. So there we have it, is our peak low. Okay, so we have a MAAW pattern validated. Divergence is also there. Okay, that's perfect. Now what we're gonna go for, this is GBP USD, so it pretty much plays out according to the Euro USD as well. Yeah, they did the stop hunt already. Huh. Yeah, the trend is about to change, so most likely it's going to be a WVVM. Okay, so the neckline is right about here, so the price needs to break above this, means right about here, level 1, probably level 2, and then M formation right about here. Okay, so this is a good buy opportunity, but the thing is you need to have exposure of a little bit bigger stop hunt, which is about 100 pip stop hunt. Okay, but it's okay, because the thing is, like, you can lower your lot sizes and don't worry about it, you know. 100 pip, 200 pip, 50 pip, 25 pip, doesn't matter, your risk always stays the same, so you don't like stress about it, you know. 333 divided by 100, it's about 33, so it's about 33 pips, 33 points. GBP USD, trade 0.33. Okay, so let's trade this one. Yeah, it's a pretty much bull candles, you can see that. Okay, right about here, entry, your exit is right here, 90, 100 pip, take profit all the way through. All right, 580 pips, take profit, which is really, really good. Okay, so it looks pretty good now. Now we have a risk reward of 5% gain, which is really, really good as well. So let's take that trade and then we can focus on the other ones. All right, entry would be here. Take stop loss is about 2672, yeah, 26725, and then stop take profit is about 33575. All right, done. All right, let's go next pair, GBP CAD. All right, we're halfway through, guys, so hopefully you guys are sticking around, taking that trade with me, and we'll see how it goes. Okay. All right, this is the peak formation high right about here. We have a level 1 consolidation, stop hunt lows, brought back the price up again. We have a level 2 right about there. We have a peak formation low right about there. Let me delete all these lines, distraction. Okay, so I believe there was a reset. Oh yeah, okay. Now I see why. Okay, there we go. That was level 2. Actually, I identified it pretty badly, but it's all good. We'll live and learn. All right, so here we have a W, level 1, level 2, peak formation high. We have a level 1, then we have a level 2 right about here. Then we have a peak formation low right about here. Then we have a level 1 consolidation, which is right about there. So this was a stop hunt high, means altogether this is a one big consolidation. So means we're in a bullish cycle. The MAW is finished. Now we're expecting a WVVM cycle, and which you're gonna see that right about now. Okay, so if you're entering it, this would be your last week's low right about here. 3 to 5 right here, 3 to 5 right here. Okay, so they did the stop hunt last week right here, means I don't think they're gonna do any more stop hunts. It's probably gonna be a straight rise, but let me verify that. Okay, yeah, we are not Aikanashi. Yep, it's still bull candle, so we can still enter it. And still enter this trade, but the exposure is a little bit higher, probably about, wow, yeah, probably about 100 pip is good enough on this one too, and then we can expect a little bit more rise out of it. It's about 500 pip take profit, 100 pip stop loss, give or take, which is still good ratio. It's about here. All right, that's perfect, which is about 1 to 5 risk reward ratio. So let's trade this one. GBP CAD, I believe. Yeah, GBP CAD, 0.33. Stop loss is at 70060. Take profit is at 76260. All right, done. All right, next one is about GBP NZD. All right, let's see. W level 1. We have a level 2 here. The whole setup is level 2. Then we have a peak formation high, which was right about here. Okay, that pretty much a double top, perfect. And then a level 1. Then we have a level 2. Now we have a W formation. Let's see. Yep, so that's perfect. Right here is a one big consolidation. So M level 1, level 2. Now we're looking for W formation. Where is that? There we go. So this one, this level 1 kind of, this level 2 kind of dragged along, which is like this, which is like a big wedge pattern, but it's just a big consolidation. That's all to it. Right about here is where we're looking for a W formation, which is right about here. And candles, right about there. And as you can see, pretty much now it's clear. Now we have a MAAW, WVVM coming up. So W was created here. Level 1 was created here. They came back and did the stop hunt. The divergence for the W was right about there. This was the stop hunt high, a drop, stop hunt low, rise. Now we're looking at a level 2 structure right about here. So what we're gonna go for is a nice level, probably about maybe till here. That's it. Okay, and then a reversal after that. Okay, and you can continue to go down a little bit longer. Okay, but we have a pattern here validated, which is the GBP NZD. So what we're gonna do is let's see. Yeah, it's pretty bull run is over here. So 100 pips, probably 300 pip would be best. Okay, so W formation level 1, level 2, stop loss goes right under. This is depends on what kind of setup this is, but right about here, 950, 3000, and then 1000, and then okay. Then how does it look like? Okay, perfect. So 300 pip is a good number. 3% risk. I mean 3% gain out of that trade. And most likely, let's see if we have any. Okay, yeah. So this is good. 300, 100, perfect. Okay. So MAAW WVVM is about to be completed. GBP NZD is good to go. About 100 pip on GBP NZD. Trade 93950 is your stop loss. Take profit is about 97950. All right, done. All right, next is GBP JPY. We're gonna analyze it. All right, cool. Okay, good. All right, I believe this one. Okay, yeah. Okay, we have a reset right about here. We have a reset, which was 1 push, 2 push, 3rd push. Right over here is a reset. So 1 push, 2 push, 3rd push, and then pretty much we have M formation right about there at the very high point. There. All right. So pretty much starting from this, we have to count our levels, which is an M formation right about here. Then we have a level 1 right about there. We have a level 2 right about here. Then we have a W formation right about there. So what we're looking for is now we're looking at a W. Is it a W? No, it's not. It's not a W yet. I mean, sorry, it's not a level 1 yet. Right about here. Candles. Okay. So pretty much we have an M, level 1, level 2, W formation. The neckline of the W hasn't been broken. The divergence is there, like I mentioned earlier. Perfect. Now all we need is a breakout first, a little breakout, and probably a consolidation like that. So level 1 gonna consolidate right about here, and then probably level 2 right here, and then peak formation high right about there. So okay, option R. All right, and you can see pretty much the neckline got a broke out this week. Is doing a retest, means it's gonna have a nice impulse to the upside, probably about 50 to 100 pips. Let's see, how many pips is that? Yeah, about 100 pip take profit, probably about Yeah, 25 pips stop loss. We're good to go on that one. Okay, so 25 pips on that one would be good. 333 divided by 25, it's about 13. 133, 133, JPY. All right, this one is about 28% gain on this one. It's about 705 pips take profit with 25 pips stop loss. It's about good numbers. Okay, so stop loss gonna go at 134,330, and then take profit's gonna go at 141,630. All right, done. All right, now let's see, GBP CHF. All right, it's coming out of like from the bottom, so means we're gonna focus on the top, which is the highest point. This is the resistance information. So this would be a level 1 consolidation. This would be a level 2. We have our W, we found it, perfect. There we go, there we go, there we go. Now we have a level 1. Now we have a level 1 right here. They came and did the stop hunt here. Now it's rising in its favor, so probably level 2 is going to form here, and then a peak formation here. So we have a setup which is a MAAW WVVM, and now we're going to trade that. All right, so let's see, a breakout happened right about here. So most likely might come back to test it and then take off. So placing it below right about here is good. So about 100 pip take stop loss is good enough, because we're anticipating in about 340 pips. So it's still good. It's about 1 to 3, which is good. GBP CHF. All right, so buying in. Let's get it. Let's go. Okay, so let's go. Stop loss is at 1760, and then take profit would be at 22100. All right, done. All right, next USD pairs, almost done. Almost done. We got a few more left, and then we're gonna be done. All right, so we have peak formation high, level 1, level 2, W formation, all this. Let's see. Okay, so we have an MAW, WVVM. Then now, when you're looking at this one, it makes a lot more sense. Right here is your Level 1 consolidation, which kind of consolidated for a long period of time, and then came back to the low again to hit it, and then took off. So we're not gonna go based on the bigger time frame. It's on a 4-hour time frame, but we're gonna go based on the 1 hour. So we're gonna look at the weekly cycle of setups 3, 4, 5, 3, 4, 5. Okay, so pretty much this was the last resort right here. That was the consolidation right about here. So anything above it was a consolidation. So right about here is your level 1 consolidation for that level 1. So it's going to be a nice little rise for the USD JPY. From what it looks like, it's going to be, yeah, it's going to be a nice trend line, level 1, and then we have a level 2. However, price is not at a great entry point. Means if the price comes back here, then I'm going to look for a buy opportunity. But right now it's not good because I don't know what it can do moving forward. It can do a lot of things. So uh, it's not good for me to buy right now. So I'm just gonna wait it out, see how the price will move, and then we'll take that trade. Okay. All right. Next one is USD CAD. So uh, we have about, all right, so we have a W formation right about there. Divergence is visible very clearly. So we know that the level 1 is forming right about there. Level 1 is about to be breaking out. There we go, perfect. And then level 2 right here. Now we're looking at an M formation on the USD CAD. Okay, now this would be your anchor point. There we go, that's your resistance area. All right, so option R. All right, so pretty much on Friday, they tested the high. Means they already did the stop hunt. 3, 3, 4, 5, right about here. 3, 4, 5, right about there. Okay, so pretty much last week they impulsed it through. They did the stop hunts all the way through, like all the way till Friday. Even till Friday they did the stop hunt. So which means I don't think they're gonna go back again anytime soon. They more likely they're gonna go down. Okay, but here is the small candles. Most maybe it can go up, but I don't think so. Option R. Yeah, right now it's not ready yet, but the thing is, if it goes back up, it will be ready. But here is a 1 hour time frame. Divergence is there. All right, so I'm gonna look for a sell opportunity. I'm gonna have the stop loss above it, so that way I'm not tapped out. Um, all right, so let's go. Okay, having a 50 pip stop loss is perfect on this one. So that way we don't expose ourselves much, but at the same time we make the most out of that trade. So 3390, 300, about 3380, 88, 89, 90, 340. Okay. All right, 50 pips is good enough. And then 392 pips is good enough too as well. Huh. Okay. So it's about 8% gain on this trade if you're taking a 1% risk on this. Okay. All right. So I think we're good to go on this one too. So we can place this trade for USD CAD. I believe it's gonna do it at New York session. So just stay tuned with it. And 50 pips would be about 333 divided by 50. It's about 666, about 66. Stop loss is about 34380, 34380. Take profit is about 29960, 29960. And make a sell, and then done, and then that's it. All right. Our next is USD CHF. All right, we have a lot of congestion here. We see a level here. We see another level here. Okay, so we have a peak formation high here. We have a level 1. We have a level 2. Let me delete all this nonsense. Uh, uh, all right, so probably www. Okay, so now this is a bigger time frame, means it's on a 4-hour time frame, but we can still analyze it on a 1 hour. Right about here is about the peak formation low that was created. It hit the low probably a few times, 1, 2, and 3, 4 times, but each time when it created a W formation, and right now it's taking off, and it has broken the structure of the neckline of that W. So most likely it's gonna create a big level 1 consolidation, and then probably gonna go on its way. But let me go on a 4-hour time frame and see how it goes. Yeah. Okay. So it looks good, but what we need to do is we need to wait it out. The divergence started actually here, means all the way till this point, but the lowest point was this point. So means all this is just the neckline. So means the price can consolidate here, or it can come. I don't think it's gonna come back because it already did the most stop hunts over here. So more likely it's gonna consolidate and then take off. Okay, but this is gonna be like the viewpoint of the trade itself. M level 1, level 2, and the peak formation low. That's it. But I'm not gonna trade it. I'm just gonna wait until the setup forms. All right, next one is okay. We found it already. This is the peak formation high, level 1. Then level 2 was right about there. Level 1 was extended. Level 2 was extended a little bit higher, but failed to break the high. Then the peak formation came along. That was the lowest point. This is the lowest point. Perfect. Identified. That's the low. Level 1 was right about there. Level 2 is right about here. Peak formation high is right about there. So we have a setup, which is the MAAW WVVM cycle, from all the way from here, here, and then from this point all the way till here. Now, this point right here is the peak formation high right here. So what we see is the price came back on the level 1 structure. So it means when the level 1 is created, they came and did the stop hunt. So right about here, they did the stop hunt low, collected money, created a W formation, pushed the price high, hit the high again, collected all that money, and then dumped it. You can see the big dump. That's what the institutions are dumping, okay? And then right after that, there was a retest, breakout, and then simply a drop. Now this is a level 2 consolidation, okay? So level 2 consolidation can go two ways. It can go up and then down, or it can continue to go down. But I don't like to trade level 2s, and it's not giving me a best option right now. So I'm not gonna trade it. I'm just gonna watch it and see how it plays out, okay? All right, next is NZD JPY. All right, we have a peak formation high here. We need to look for level 1. We found it, perfect. Stop hunt low. Then we had a breakout again. This is the level 2. Then we have a stop hunt low W right about there. Okay, now we need to identify where the level 1 and level 2 is. It's pretty choppy, but the thing is, like, right about here is a level 1. 1 push, 2 push, third push, that's a level 2. And then the final stage was right about there. So that's the M formation right about there. It has the divergence to validate it right about, oh wow, the divergence started here. So means this is the one big structure of that M. If it is, let's see. Oh yeah, okay. So right here, that's the W formation, M formation. But it already had a big divergence. Then we have a level 1. Then we have a level 2. Then we have a retest of that level 2. Then basically you can see the divergence started all the way from here. Okay, so right about here, right there. So that would be your stop hunt low, W formation, and then right now it's creating a consolidation area. But from what it looks like, it's gonna take off from this point because already did the W formation right about here, intraday W. So most likely it's gonna take off to the high, which is right about here. So take profit zone is quite good. Stop loss is not, I mean, stop loss is okay. It's not that big. Let's see how much stop loss we have. It's about 50 pip stop loss. So give or take, which is good, okay? Option R, right there. All right. Okay, now 50 pip stop loss. Take profit is about right here. It's about 5% gain on this one, which is good. All right. Okay, so trade is ready. Let's trade this one. NZD JPY. How many pips was it? 50? Yeah, 50. Okay. So 333 divided by 50, it's about 666, about 66. Okay. 6850. Yeah, 68590. 68590. Take profit is about 71690. 71690. All right. All right. So I think this was a long webinar. Huh. But it's almost done, guys. Almost 2 more to go and we're done. I don't trade gold, but we're not gonna even analyze it either, so it's okay. All right, so we have a peak formation high. I think we have levels here in the past. Let me check. Yeah, okay, so we have a much more bigger pattern. I'm gonna focus on the smaller ones, so which is right about here. Neckline breakout, M formation, divergence. All right, okay, I think this is a level 1 right about. Okay, neckline breakout, neckline breakout level 1, and then we have a level 2 right about here. Then we have a peak formation low right about there. um, then we have a level 1 here, then we have a level 2 here, then we have a peak formation high here, then we have a retest on the level 1 right here. We have a retest, break above it, means right about this point, but the price came back down. um, hmm okay, uh, yeah, all right, so basically right about here we have an M formation, divergence, and now we're looking for level 1 consolidation, which is right about here. So the consolidation can probably go up again, hit the high right here, and then drop. Okay, so we'll see how it plays out, uh, but we just have to wait it out. I really don't like it, so I'm not gonna bookmark it. We're just gonna wait it out for the whole thing to play out. All right, next one is NZD-CHF, the last pair. Uh, this pair was good. Let's see, what level were we on? Okay, so we were on a peak formation high. We were on a level 1 consolidation. Then we were on breakout right here. Then we are on level 2 right about there. And then level 2 had a push, let's see, 1 push, 2 push, 3rd push. So basically from this point onwards, you have to look for the setup, which is the reset of the market, W formation, level 1, level 2, peak formation high, right about there, level 1, level 2, peak formation low, perfect. Okay, next would be, yeah, next would be level 1, which is right here, level 2 right here, peak formation high, perfect. Okay, we're getting it. Okay, perfect, we got the setup, which is the MAAW WVVM. Now we were on level 1 right about here, level 2 right about there, W formation right about here in the intraday cycle. Then you have a level 1 right about there. I believe that the price might come back to this low, or it can go either straight or either down. But the price, if the price comes back, that's the only time I'm gonna buy. But there's a potential that the price is gonna go straight ahead. But which is, this is NZD-CHF, means it contains less volatility, less liquidity. So the pairs kind of don't tend to move quite good. So, but if the price comes here, that's when I'm gonna look for a buy, which is right about there. Okay. Until then, I'm not gonna touch it. Until then, I'm just gonna watch how it goes. Okay. All right. I think that's about it for tonight, guys. I think last one would be gold. Let's see what we have for gold. Gold tends to do a lot of stop hunts, which that's the reason why I don't like to trade it. It does a much more bigger stop hunt than anticipation, and that's why it's like it's much more better to avoid it and trade the other ones. So peak formation high, we have a level 1, and then we have a level 2 right about here, all the way through here. Now we have a retest. We have a retest of this price action right here. So probably the price might continue a little bit lower. Yeah, MAAW and then WVVM. Extra level, I think this was a divergence. Yeah, it's not that clear, okay? So I'm not gonna trade it, I'm just gonna avoid it and just wait for the better opportunity to come to you. I think that's about it, guys. I think we're done for tonight. Uh, and I'm just gonna trade what we see, and then we're gonna move forward, okay? All right, guys, so that's it for tonight. If you have any questions, make sure to type that in the chat room right now, so that way I can answer you guys right now. If not, peace out. So I'm just gonna wait 3 more minutes before I end the call. If you have any questions, feel free to ask in the chat room. All right, perfect. All right, nobody has a question, so we're gonna end the webinar, and I'll see you guys probably next week, okay? All right, guys, peace out.